Good morning, traders. Welcome to the Flow Show on this crisp and chilly morning. Some winter storms blowing in across Europe and coming to the northernmost parts of the UK. So the old energy supplies are going to be put to their first test of the winter, it seems. Morning, Kay. How you doing, mate? Keeping warm?
Hi, good morning, mate. I wouldn't know how it feels outside. I'm under my duvet here and just watching the screens. My PC keeps me warm.
Yeah, the radiation glow. Surprised we don't all have tans like the guard with the radiation glow off our screens. But
Yeah, maybe we should change our screens and
yeah, exactly.
those radiation.
Right. Yeah, let's get stuck into it. PBOC still fixing down in the 711, 711.32 today. So keeping the pressure on the pair down there. As you can see, dollar China on the chart there. Just not really doing an awful lot, going a bit sideways, though. We are just, we haven't had a retest of the lows down here. And we're just sort of grinding up a little bit. It's all small stuff. But based on the grind, it might be that we get a little push up through this zone again, maybe up to the 720s. But it's a bit of a coin flip, one headline, one bit of pressure, and we're back down again. So a little bit of sideways action going on there, but the fix is still coming in down around the 711 mark anyway. Over to Japan, and apparently they're going to give more tax breaks. It must be the season for tax breaks. We've had them here in the UK, and they're handing them out in Japan as well, this time to domestic electric vehicle and chip producers. That's according to the Nikkei. One of the large Japanese, or the largest Japanese business lobby, Kaidaran, is going to apparently have a discussion on the negative impact of a weak yen, according to Yomiuri. So comments from that might be portrayed to the government as well. We'll see what those brings. Obviously, there's two sides to a currency movement. So you've got the import impact and the export impact. So there's always two sides of the argument on that one. The Nikkei also had a piece out on the BOJ overnight. I read through it. It was nothing much more than a bit of a review and amalgamation of everything we know, talking about the potential for a hawkish tilt at the end of negative rates next year if all the ducks align. So it wasn't really anything that told us anything new on that one. Over in Australia, retail sales came in a bit soft. Let's get those up. There we go. Retail sales coming in at minus 0.2%. We're expected to rise 0.1%. So potentially some biting from hikes happening over there. RBA Governor Bullock has been out and about again, said we're in a period where we have to be a bit careful and that monetary policy is restrictive and that rate hikes are dampening demand. Well, we can probably see that, as said, in those retail sales numbers there. Back to Japan, and a bit of potentially important data. This BOJ core measure dropped back some to 3%, was expected to come in unchanged at 3.4%. So quite a significant loss on that inflation number, which plays into the rhetoric from UEDA that they expect inflation to pull back. They've been pushing against the string on that explanation, but maybe this is a bit of a turn coming in to those inflation points that they've been banging on about. Quite a big drop, that one, Kay.
Yeah. But again, you know, that core, it takes away the more volatile and probably more sticky data. But yes, I mean, okay, UEDA has told us that he expects it to come down second half of their probably fiscal year, which is seemingly materializing at least this month. I really don't know what I don't think it's going to change much, but it does seem that the market reacted a little bit on it when it came out. Yeah, I mean, if we get several months, it's always the same, right, Ryan? If we get several months of this, then the market is going to turn around and say, well, UEDA was right, and they're probably going to price out or at least go back onto the defensive for what hikes are concerned. It's a 1 month read. I'm not going to go like, okay, this is it for the yen. We've seen the best days, and let's sell the yen again. It's just that it's it's a number, right? That we need to put into the pot. But again, yeah, he was expecting it to come off. It seems to come off, but the other one, the headlines are not coming off, and the headline numbers.
No, that's it, and you make the right point. You know, this is just one number. We did see the core CPI coming down. I think it was from 4.1% or 4.2% to 4%, but the others were still pretty sticky. So yeah, I mean, I don't know what they put into this core number, but you know, yeah, is it significant? Potentially, like you say, we have to see a string of them. We have to see a trend developing. You know, if something like that starts dropping to 2% and we see the rest of the numbers coming down, then that plays into UEDA's hands, and like you say, will turn around expectations for them tightening next year. So I wonder what they'll do on that front. If inflation does come down, will they still be citing wage hikes as a reason to tighten, even if
Yes,
inflation's down at
I
target?
am. Yeah, that I think is one of the conditions, and they likely will get a second year if you listen to what the officials also are saying, like the Kishidas and things who are putting those plans into place, really trying to help not only the consumer and the private tier, the saver and stuff, but I still think we are in a normalization process over there. But again, if we start to get numbers like this coming off, it will just make it even slower, perhaps. But no, I think this one doesn't change much. The normalization process will continue gradually. But we've seen now the market is seemingly buying UEDA's rhetoric, because if you look at the JGB 10s, just to look at those, it is holding around 75 BPs. It's not crawling back up to the 1%, which I would have expected that would be probably trading closer, let's say up in the 90s, you know.
Yeah.
But we are at 75 BP, so it seems the market has bought UEDA's pace. Probably we can express it like this, and go for a very, very slow one.
Yeah, cool. Imagine if Japanese inflation's below 2%, like March time, and all those wage negotiations are coming in. They're going to have to try and be hawkish while inflation's below target. Cool. That's
the thing is, I reckon if inflation continues to come down, assuming that it continues to come down, I think the market will turn around and then say like go the other way again, and that's perhaps when the surprise will come.
Yeah.
But it's like it's going to be a months-long process, right?
Yeah, exactly. Hopefully, some fun and games for us to trade anyway. But again, another one probably to look at in the early part of next year anyway. Right, coming over to the UK, HSBC, the boss of HSBC said that Black Friday spending in Britain rose slightly. Barclays also had some data out saying that UK payment transactions on Black Friday were down 0.63% year on year. So a bit of a mixed picture for the Black Friday sales. A bit more anecdotal evidence. My wife and son were out Saturday, and again, shops absolutely ramo. So I think we're heading for a bit of an uplift in retail sales in November when we get those numbers next month. That's sort of 3 different evidence points I've had now that show there is a bit of a boom in spending. Whether that's lessened what's happened on the Black Friday, Cyber Monday stuff, I don't know. But on the ground fault or the ground fall, whatever you want to call it, footfall is looking pretty strong in UK retails at the moment. That was a bit echoed. I'll say a bit echoed. We had the CBI data, UK CBI data, yesterday morning during the flow show for the retail sector. Distributive trades, these are retailing reported sales, came in at -11 versus -30 expected. It's very rare to see these numbers in the positive. It's a bit like the Eurozone consumer confidence. It's always glass half empty, but as you can see, that's a quite significant improvement over what was expected and prior. Distributed reported sales also showing the same, coming in at -9 versus -21 previously. So it's the anecdotal evidence is matching up in the numbers. It's still negative, but still quite a strong improvement there. Bank of England Deputy Governor Ramsden said that UK inflation is more homegrown. That means more domestically led, which is something that they can affect with rate hikes. He said it's been challenging to squeeze out services inflation because it's services that pose the most risk of persistence in inflation. He's not making any commitments on where rates will be. He's staying data dependent. The ECB, we had those sneaky insiders coming out via Econostream yesterday saying that a rate cut is likeliest next move, but won't come soon. But that was countered by a comment that if inflation encountered resistance on the way down, renewed tightening would be needed. Very much sounds like a certain German central banker with those comments from the source. 1 second. Excuse me, just had to have a little old sneezing fit. ECB's Lagarde waffling in a committee hearing or something in Parliament yesterday said euro area activity has stagnated in recent quarters and is likely to remain weak for the rest of the year. This is not the time to start declaring victory. There are some signs that jobs growth may lose momentum towards the end of the year, and that they are to discuss PEPP in the not so distant future. By my reckoning, I reckon they'll drop some hints in December for a proper discussion early in the new year. And then she came out with a bit of a strange comment saying that they're keeping or a close eye is being kept on the FX rate. Why would they be worried about the FX rate right now, Kay?
I reckon it's a comment that had been lost over the past commentators' interventions, and perhaps Lagarde just came back to it, and because recall in prior statements after the ECB meetings, it was in the statements, but it had been dropped. Perhaps she's just happy that the euro is pulling up a little bit, because it's a higher euro is fighting would be fighting inflation. Yeah. I don't know, mate. I wouldn't read anything too extravagant behind it. The one thing that stood out for me is that she confirms that they will talk about the PAPP and the reinvestments on the pandemic program. So that is more or less confirming what the market is expecting. Yeah. But also saying that it's going to be a way of keeping those yields a bit underpinned in a form. It's a bit like Powell also was dropping hints at that QT is still running because the financial conditions had eased, you know. And I reckon it's Lagarde's way of saying, like, hang on, we are working on this, and don't start to loosen financial conditions too much, guys, because we still have something up our sleeves, you know.
Yeah, I'm not sure it's going to be hugely massive for the euro.
No.
It's a bit like when they, started QTing. Everyone started QTing. It is a bit of a tightening move, obviously, but it's not something that the market. Maybe there's a little knee jerk on the confirmation if we get it, but I doubt it's something that's going to be have any lasting impact on the euro. But
they're never going to roll it off the way the Fed does QT. I mean, and for some people who are still a bit new to the market, I mean, we have to know that the US is usually historically always been more dynamic than Europe, which is not for nothing called the old continent. They're always a bit slower. They also injected less money, right? So we are going to talk about a smaller QT than what happens in the US, all else equal. But yeah, it can have a bit of an effect in reducing a bit of the reserves, pumping on the excess liquidity and stuff. So it's basically Fed's QT, ECB style, but they haven't started yet because they are still actually reinvesting the proceeds. So the thing that they are going to do is just stop reinvesting those proceeds, right?
Yeah, and then we have to worry about when they start draining the swamp, the balance sheet swamp. So yeah, another one to put in the pipe for next year, I feel. Right, some of the other ECB bods. ECB's the cost says it's too premature to talk about rate cuts. ECB's Nagel keeping up his media blitz with more comments. A bit more hawkish this time, saying that the current hiking cycle isn't necessarily over and it's premature to lower rates soon or talk about such a move. Over in Germany, Volkswagen are warning about some major job cuts to come. They're looking at some 10 billion euros in cost-cutting measures going through there. So some big job cuts potentially coming. That's big for Germany. That's where the bulk of the workers are in that group. Obviously, it covers quite a few auto. What's the word I'm looking for? Auto cars. Car firms like Skoda, Audi, that sort of thing. It's a whole group there, and they're looking to, as I say, cut a load of jobs there. So we'll keep an eye on that. Also, a story I picked up that foreign investment in European startups is apparently grinding to a halt. This is from people like venture capitalists investing in new firms, particularly in the tech sector and whatnot. According to a report, last year there were 82 such big investments made, and there's only been 4 so far this year. Higher rates being cited as one of the reasons why investment is dropping, and that's foreign investment as well, so coming in from all different countries into the Eurozone. Maybe that's part of a global trend due to higher rates, people just tightening up where they put their money. Over in the US, we had new home sales coming in softer than expected, softer than last month. As you can see there, down 5.6%. Also, a bit of a drop in the median sale prices, came in just shy of 410,000, which was down 17.6% on last month, which was 419,000. Also down 12.3% versus September prices last year. So a bit of a hefty drop in prices there, and obviously a drop in new home sales. Home sales have been a bit mixed of late this month. No real clear trend, but the market's likely to drop on the negativity numbers, or the negative numbers more so than the positive numbers. Particularly those price components might be signalling some trouble ahead, one to keep an eye on. We had a couple of auctions yesterday as well, which were one could call a bit soft on the demand aspect, though the 5-year notes had a higher bid to cover than previous at 2.46. The 2-year notes had a lower bid to cover than the previous auction in those. The 5-year had a small through. The 2-year had a small tail. What did you make of those? It was 6 of one, half a dozen the other, wasn't it, Kay?
Yeah, exactly. I wouldn't read too much in it. The dollar lost a couple of pips on the second one because we were, if I am correct, let me just go back onto it. Yeah, I mean, the second one went a little better, but literally we were trading pips at the time. I had several questions there. Chris in our room, and then this morning Horatio. You want the people want a bit of explanations on how those things work. I'll I'll um, I'll prepare a little bit on that in one of the next flow shows, okay? Because it's a very valid question, but it's going to take a bit of time to run through the different aspects of what we are looking at. But basically, you look at where the market was at the time of the when issued rate comes out, then you compare the highest rate to that when issued to see whether there's a through trade when that means that there was a lot of bidding going on, or whether there is a tail, which is usually a little less good for the auction. And then you have to compare the bid to cover rates and the direct and the indirect bidders. So there's a bit to talk about. But really on the main face of it, without going into too much detail, although they are relatively important, on the direct and indirect bidders, you just look at where the auction ends up compared to where the market was, compared to when issued rate comes out, and then compared to a series of prior auctions of the same note or the same bond or the same bill, and then you compare where it comes out compared to those to judge whether the auction was a success or a failure. Now, yesterday's were like exactly as you say. There was one okay, the other one a bit less, but we're also end of month, and perhaps that with some of those asset managers needing to rebalance a lot of stuff, that may have had a bit of an impact as well. But as such, the 5-year wasn't too bad at all.
Yeah, and normally the market wouldn't give too much bother to it. The main market gaze, if you like, on these is because the US has raised how much they need to borrow to fill all these fiscal holes and gaps that they had the last couple of years. So there's a much more increased issuance going on, and the main market gaze is on how is that being taken up, the demand for all this extra paper that's being issued, and how much that demand, if it's falling, is putting pressure on higher rates. Obviously, if there's less demand, investors tend to demand a higher rate to lend that money. So it's really a demand issue, whether the US can actively sell all this extra paper, and it's being taken up strongly. If it's been taken up weakly, then that suggests that they're going to struggle to raise the amounts they want to raise, which then the market thinks, hang on, we've got some problems here. Demand for US debt is dropping. Why is it dropping? And then you start the snowball rolling of worries and fears and whatever.
Yeah,
so that's just in this situation what the market's looking at.
Yeah, and what I also said was like we have to take it in the context of huge. Up to a few months ago, there was like huge money sitting in the money market funds in a reverse repo, and if that money judges that we are at relatively interesting interest rates and expecting, like for instance, a recession, or expecting at least a slowdown in the economy, expecting like we are now for next year that yields are coming lower, they will be tempted to take some of this money, which is sitting there, even at interesting rates, but then go into the bond market because they can make money out of on those bonds. All right, so it is in fact a measure of nowadays, a measure of saying like, is the treasury, has it, if they get it easy to those auctions are very easy, that means that the take-up is pretty high. That means that the market is pretty confident that yields are going to come off again as well. So it's really a judge of whether, especially at this point in time, whether the market believes that we are at the end of the hike cycle. That is clear. But is it going to remain higher for longer? In which case, those auctions can be a bit erratic. You're going to have one good one and then a bad one. But if they all turn out to be good auctions now, that means that a lot of money is getting put to work.
Yeah. And another thing to look at just finally is that we're still seeing the short end yields holding up. If you look at these auctions here, 3 month, 6 month, yields actually higher than prior, whereas you go further out, the yields that these auctions happened at are lower than previously. So we're still seeing the longer end of the market yields dropping faster than at the short end, which obviously then people draw their own conclusions from. So anyway, just a couple of insights, and I look forward to Kay's lesson on bonds. We'll have to schedule that in, mate. And yeah, we can all sit with our notepads and pens and take notes, and we'll all be better for it after that. Right, just two little final bits of data, well, information. Keep an eye on these online sales in the US. Cyber Monday, according to Salesforce, they are to grow in the highest single digits globally in the US. So it looks like Cyber Monday sales also coming in at the top end of expectations or beating last year as well. Finally, Deutsche Bank have jumped on the US rate cut bandwagon. They see a US recession prompting the Fed to cut rates by 175 basis points throughout 2024. So it's probably at around the middle of expectations, middle to topish expectations that we've had thus far. That's it on the headline front. Kay, any bits and bobs you got?
No, just a few numbers coming out saying that the hedge fund community still hasn't let the long dollar ID go. They rebalanced a bit between the one and the other currencies, but they still seem to, despite the dollar being lower in October, despite the equity markets being higher, they're still holding on to long dollars apparently. Which is a bit strange because we had seen reports that the market was pretty long euros at one point. So yeah, that's just the thing is that the press has to write things as well, right?
Yeah, exactly.
No, for the rest, I think it's been relatively quiet. You were talking about Deutsche Bank. I think it's Bank of America, right? Who is expecting loads of cuts and very, very bearish dollars for 2024.
Yeah, and UBS as well. I think UBS lead the pack for most bearish or most dovish so far. But yeah, the others not far behind. I'm keeping half an eye on it. You know, with these, like, they change their mind like the weather. A strong NFP next week, and they'll all be rewriting their forecast the other way, no doubt. But yeah, anyway, we keep an eye on it. Right, Chris, just to answer your question. Yeah, this Adobe stuff, it's fairly new. I think it was running last year as well. I think it was the first time I heard of them reporting all this online stuff. It is just for online sales, though, and particularly dominant in the US. They're just faster insights than they come out literally hours after each event, so it just gives us a bit of live data, if you like. And so far it's been pretty good, but whether that translates into just a bit of a splurge for these deals, again, we don't know how the bricks and mortar retailers have been doing. We don't know how that translates into the sales going into December and whatnot. Hence why we usually I take both months together to judge how retail sales have been over that period. Right, so moving on, let's have a look at some prices. So dollar yen, yeah, had a little bit of a wobble overnight, just nipped under 148 briefly. Might have been some fix action in there. We are value date end of month, because that's when we sort of seem to bottom not too long after that. And then we got that data out, which may or may not have sparked the rally higher, but certainly it's bounced and it's ticked right back up. I've got this on-off intermediate line around 148.80s, and okay, got some bits and pieces there as well. That's where we've marked a top for now, so potentially technically significant that we're stepping down now through the levels. as we saw before, couldn't get up to 150, held below in the 149.70s. Then we've just been edging lower. Now we've had a bit of a break. We're finding resistance at one of the intermediate levels. It just keeps the momentum going. We do still see some decent bounces in the dips, but it does looking like the forces with rally selling here still. And I'm still getting an itch to maybe start getting in some shorts, but obviously lots to consider when doing that. We've got a bit of a pause happening in some of the other pairs. Euro dollar, it's had a couple of cracks now at this fib and this 109.60 area. Can't get through. Still in a balance. I think if we end up a couple more sessions where we can't get through, we're probably going to see a bit of a steeper pullback. Where that goes is anyone's guess, likely down to the big figure, at least maybe down to the zone again. Just because, you know, if buyers can't get through here, then they're going to give up a bit and get out and see what happens after that. And similar has been happening with cable as well. You know, we made that high yesterday. Now we're just knocking up against it again. Bit of a ping pong between the big figure and up here towards 126.50. So again, this one's a bit of a coin flip. If we can't get through, then maybe we have a little bit of a look lower, maybe punch through the big figure, and you know, maybe even as down as far as 125.5, something like that. You never know with cable. But what this does do for this and the euro is the more times we bang our head on it, the more the pressure builds that when we do break, it might be give it a little bit of a kick up. So we might be through there and then visiting 127 not too long after. Same for the euro. If we get through that 109.60, 65 area, then we might be looking at 110 not too long after that. I might try a little buy stop in euro dollar if that's the way it's looking, just to see if we do get a breakthrough. You know, but a few days now knocking here. If we do get a breakthrough, then there might be some legs in it, and if I can fold it into my core long thereafter, or some of it, I will do so. Dollar CAD's looking a bit weak this morning. Now we're through 136, coming into a bit of a traffic area, from sort of 135.80s down to 135.5. So again, another one of just these on-off areas where the price tends to say run into a bit of glue down here. We're back in this wedge, if you want to call it. We have been outside, looking like it's holding on the inside again. So, you know, maybe be looking for a test down towards 134, the bottom end of that wedge, which also comes in around a lot of prior old tech levels into that 134 area. So maybe a bit of a range play we're going to be looking at for this one. Just a quick flick to the oils, which not doing an awful lot, still looking pretty bearish, but we're up a little bit this morning. So just keep an eye on that. That might be a bit of a headwind for dollar CAD dipping too far if I was ticking up. But as you can see, there's nothing to write home about that. It looks on balance like we're more likely to push lower than push up, but obviously we've got the OPEC meeting coming in 2 days. I think the virtual OPEC plus meetings, whatever they're getting up to. So the risk is for this that there's some extra supply cuts, extensions and whatnot, and we see a bounce. If that fails to happen, if it's taken as a bit weak, I think we're probably through these lows pretty quickly and heading back down to the 60s area, and maybe Biden's got his bids in lined up already. Another one to keep an eye on is 10-year yields. We're doing a bit of ping pong between the levels. This sort of 337.38 and the 437.38 and the 450. That's confirming a bit of a range. This is a very tight range to stay in for long. So if you are trading the dollar, if you're waiting on cable to break up, euro dollar to break up, this might be a bit of a make or break trigger depending on which way we go. If it's down, which as I sit here today, I feel that the path of least resistance is down. If we do break down, that will probably be the kicker for things like cable and euro dollar to then break new highs and keep on moving. Obviously, on the flip side, get above 450. That's probably going to bring a bit of relief for the dollar bearishness, and we might see a bit of a pullback in some of those pairs. So that's pretty much what I'm looking at. Gold is holding up as well, still maintaining the break. I'll have to adjust my fibs, but it's still maintaining the break. We did have a little dip yesterday down to sort of 205, 2006. But it's holding above 2000, so that's probably going to be your line in the sand, the big figure there. But it's still maintaining it. It just needs to push on now and make these gains count. Again, we're just seeing a little bit of reticence to take out these highs. You know, we had the first spike high. We've now matched the high. Even if we just nick a new high, 19s, 20s, it just keeps the momentum going. But if we can't get above that, then again, maybe some of these buyers here who took it through will start to think they need to take more profit, and we see again a pullback under the level for that. Really, for me, I don't know about UK, it's just circling around, just trying to pick the snipe points and manage what you got. I'm not seeing anything major to jump into right now. How about yourself?
Major, maybe not. The thing is now, we have seen a month. We've had a month of quite big moves, whether it is on the equity markets and the or the bond markets, and the end of month flows are likely already busy, already ongoing, and there seems to be some decent rebalancing needs everywhere. So I guess now, and that's what I usually do when we get to that point, and there have been serious moves in some markets. I guess we need to trade with a stopwatch in our hand, or with an eye on the clock, and that's really what I'm going to do. I've got a few themes that I'm looking at with trading value date end of month. The last 2 months, actually, I need to specify that. The last 2 months, we did not really see too much of US corporates buying dollars into on this day, on this value date. So makes me feel like we may be in for a little bit of a break on the euro dollar at some point. Whether it's just a stop run or the end of month run remains to be seen for the rest of today. But at least tomorrow and the day after, we may be in for a bit of a run, because the expectations, the model expectations, is being documented enough now. I don't think that I'm saying anything which is secret also here. Everybody's thinking that all the models are pointing at quite heavy dollar sales, and that may just be what we are seeing already right now. There's very likely a good portion of front running in it as well, where FX market is trying to make those dollar sales as cheap as possible, and take some profit on the back of it. Yeah, that's about what I'm doing now. On the other hand, the market is expecting dollar sales, but I also am looking at a couple of euro crosses, because the euro markets have more or less mimicked those US markets. So I'm of the mood that some of the euro crosses may be also under a little bit of pressure come tomorrow or the day after, but we will see. It's really end of month. If we get an extreme on the dollar come Thursday, I'll be looking at probably counter trading some of it. But right now I'm keeping my dollar positions very, very small. I'm just a bit long here, Aussie dollar, and I'm trying to see if this euro dollar caps here at 60, but really my risk is extremely limited on the back of it.
Yeah,
trades above 60, 65, I'll probably be out of there, and then just let the rest of the market do its thing.
Yeah. Just before I hand the baton over to you, I just want to flag this up just so people are aware of it. One of our mates in the chat room, Five Magics, put up a story yesterday about the PBOC signing a swap deal with Saudi Arabia. Just a headline popped up. They've also signed a deal now with UAE over wine swaps. There's a bit of conspiracy stuff going around from our mates at Zero Hedge, doing what they do best, about how this could be a big old geopolitical play to get the Middle East off the dollar, that sort of thing. I won't go into the details and nitty-gritty. Those of you in the chat room, check out the Flyonomics room and check out the newsroom, and you'll get all the insight to that. But just that it's popped up today that they've now signed with the UAE, just after signing with Saudi Arabia. Might get a few tongues wagging. So if you see that bandying about the headlines, just bear that in mind. Kate, I shall hand it over to you. And I want to ask you about dollar MEX, because it had a pretty strong bounce yesterday. I did see a headline from Banxico, someone at Banxico, Heath, I think it was, talking about potential rate cuts early next year. But that seems to come after we saw this move in dollar MEX, unless I'm mistaken, of course, and someone saw the story before the rest of us did. So I just want your thoughts on that, because a pretty strong move in
yeah, there was, okay, let me then first look at the dollar mix. Is this level here, and it's been seen as a few as decent target, just around that 17 level, right? I need to clean up my my charts a little bit here. But anyway, we have seen those that interest around 17 already before. We had a bit of a drop below when the MEX was at its best on the carry trade and stuff. Yeah, Banxico is slowly changing as well, just as the rest of the central banks. And then I reckon the rest is going to be. Don't forget that the MEX is relatively close to the US, not only geographically, but it's the biggest the trading partner. So if things turn a little bit south for the dollar, the MEX could undergo a bit of pressure as well, and that's really what I guess we're seeing. People don't want to just run blindly long MEX. There may be some month-end stuff also coming in there, but yeah, this is. We can't forget it's still an emerging market currency. So we've seen about 1% move there. Those are things which can be done on a daily basis. 17, yeah, Gavin, is also the monthly level. It's a big level, and I reckon some people coming to the end of month, perhaps with other rebalancing stuff to be done, and then go like, okay, we need to take some off the table. But it is all about this level as well. Okay, we've seen also a bounce in Euro MEX. You see this level here in those low 1860s. It held up as well, and again we bounced off that same level. So I think it's a bit of a MEX thing that went through yesterday. I haven't seen a big headline come out right then. There was only like the trade balance coming out yesterday, but it did not really spectacularly tell me anything. But I think it's really rather about the levels where we're at, and people are likely wanting to take profits and square positions up a little bit. But yeah, going forward, that cements, of course, the importance of that 17 level. If ever we start to get back below there, then we're probably going to be trading a bit lower. On the top side, we have to start breaking back above 17 and a quarter, which I think it's possible. You know, if there's really rebalancing going on between stocks and bonds, it is possible that the MEX is undergoing a bit of pressure as well on the on that side. Okay, so yeah, keep that in mind. 17, 17 and a quarter. We go through 17 and a quarter. We may go back to that famous level where the 1740 is the other side of the of this zone. Okay, with the 17 and a quarter intermediate. That for the makes. There's one that popped up yesterday in one of the models. The calls for the month-end models, and it does look to me like there's a possibility, I say a possibility, that tomorrow and the day after we see a bit of more strength in the Norwegian kroner, because the Norwegian asset market has been really underperforming versus the rest, and also Norwegian kroner has been for a part of the month at least under pressure, but there is a possibility, I think, that this, whether it's euro NOK or dollar NOK, has a bit of a continuation on the way down. And as you can see, on the euro NOK in those low 1160s, we are on a bit of a level, and the dollar Norway around 1040. So keep a close eye on what's happening in the Norway. For those who follow Scandis, this thing could perhaps put a little bit of an extreme in for towards the end of the month. I'm going to monitor that quite closely if we see this acceleration over the next couple of sessions. All right. For the rest, I want to just run through a couple of crosses today. We've already seen the dollar pairs. Yeah, this euro dollar 109.60. I reckon it's going towards it a bit too easily all the time. I really wouldn't be surprised if we had it move through. But this one, I think is relatively interesting because sterling is one of my currencies that I think could do pretty well towards the end of the month. Again, today is perhaps a day where we may be looking at the other side. But anyway, until Thursday, I think sterling should do relatively well. And then look at the euro sterling. Since we've broken this trend line 86.90, we've been trading below. Stretch it to 87. Okay, 87 for as long as that stays offered. I'm going to defend my short euro sterling. We are coming into the support here around 50.60. That's been holding right now. So this is your range. I would not be surprised. Let's put it that way. If we get a move closer to 86, the big figure to end this month. Okay, so this is the thing. I'm short above the figure, so my risk is virtually zero right now on this position. But I'm going to try and run it into Thursday. Yeah, as you already mentioned, that euro dollar 109.60. It's we're too close, too close too often for comfort. If really the dollar is still needs to be sold into month end, why not have a look above 110, before this month is over? And then I'll be looking at perhaps a bit of a counter trade there. As I said, I've got a really, really small, tiny risk in there right now. Yeah, and then that cable. Cable is one of my one of the ones that I think, and I'm just in quick scalps at times right now. But I think for as long as this holds 125.90, 125.70, even down to 125.5, depending on what's happening this afternoon, for instance, it may be one that tests the high 126s up to 127s before this month is over, and then we'll reassess. All right. So if we get through to well, if it would happen today, if we get through 126.75, we may actually get the acceleration already straight away. But I think it's probably going to be decided on those hourly fixings, and that's why I'm always trading with an eye on the clock into month end. Another one that I'm having a keen eye on here is this one, Euro Aussie. It's trading a bit heavy, although this thing is really you have to allow for several pips to trade through levels because it's pretty volatile. 40-50 pips in a cross like this is very quickly done. But we are working on this trend line here. And Aussie is one of my other currencies that I like into at least into month end. So here too, I wouldn't, whether it's going to be a long-lasting move, I don't know, but I wouldn't be surprised if we are going to test a bit lower into month end as well. For as long as we are now, but there are so many levels. Every 40, 50 points we have levels here. Originally, I thought the 167 for the month end should be the one that to monitor, but now we are below this 166 figure 10ish. It may be already a good enough level to monitor. You see, we held it several times, then we broke, had a bit of a retest. Yesterday we also came close again, but we are now trading lower. I just have this impression that we may trade a bit lower at this before the month is over. And again, on everything that I'm running now, it's if I'm right, not getting stopped out before the month is over, I will take profit on all those pairs. I've actually already sliced back a bit into this trend line overnight, did a partial there, but I will take profit on everything on come Thursday 4 p.m. because I do not know what's going to happen the start of September. All right. As far as the dollar pairs are concerned, yeah, the Aussie is the other one where I said I wouldn't be surprised if we get up into those higher 66s, okay, before the month is over. We're holding pretty well now. Yeah, first level of interest, I think, for as long as we're above this 65, 80, 85, it's just a continuation here. Just looking at the clock, Ryan, I think that's okay for me for today. I'm giving it back to you.
Yeah, thank you very much, mate. Good stuff as always. And yeah, have a great day, everybody. A couple of things to keep an eye on. We've got some house price data coming in from the S&P, Core Logic, and or Case-Shiller, and the FHFA, and then we've got US Conference Board consumer confidence later. Keep an eye on that one, particularly for those inflation expectations. On that note, have a great day, everybody. We look forward to seeing you all again tomorrow. Thank you very much, Kate. Thank you all. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.